Okay, Ryan here with James from Bond Street Mortgage to talk about three things you shouldn't do in big red letters there. Three things you shouldn't do if you own a business and you want to get a mortgage. James, you do a lot of these kinds of loans for self-employed entrepreneurs. What are these three things they shouldn't be doing?
Yeah, thanks, Ryan. And being self-employed myself, I do believe wholeheartedly, of course, in the self-employed community, a big part of our economy and our country. And because of the changes in regulations at post-financial crisis, I think the self-employed community unjustly has been penalized the most as far as mortgage lending world. So we're really trying to create as much liquidity in the marketplace for self-employed individuals to get mortgages. There are guidelines. It's not the 10 years ago stated loan. We are using business bank statements or personal bank statements if you're just an independent contractor out there looking at the last 12 months period. So, one of the key things is if you own a business or you're even a sole proprietor or consultant, be consistent in which account you make your deposits from your income. Quite often I see, that an independent contractor that may own an LLC gets checks written out to their name personally, so they deposit it to their personal account. The next job they do, they make it out to the LLC and they deposit that into the business account. Don't do that. If you have an LLC, have anyone you do contract work for, they don't care who they write the check to. Have it written out to the LLC, have all of those monies deposited in there. And
so this is so that you can show consistency and claim all your income, right?
Yeah, that's right. So when we're underwriting and when we're qualifying for the mortgage, we're looking at those accounts and we're looking at the deposits that are business related. So if you have those deposits going into different places, and we're typically looking at one account to qualify. So it does become much more difficult to calculate really what your positive cash flow is. So perspective, be consistent in which account you deposit the checks to. We can use 12 months personal if you're an independent contractor, but then just make sure all the business-related deposits there. Again, it does get a little more complicated there, and I do recommend creating a separate account, even if it's in your name individually, where all that business income and expenses come out of. Because if you're depositing those checks where your gifts, birthday gifts, or whatever, all your personal related items are going into, we do have to audit all of those bank statements and figure out what deposit is what. So it really slows down the process. One account where all your business related income goes into and all your expenses come out of, whether it's personal or business, and we're looking at the last 12 months.
Great. And let's take a step back and mention that the context here is that there are actually programs now that will let you qualify for a mortgage based on your bank statements alone without having to show tax returns. So that's why this is so important.
That's right.
Okay, great.
Use that cash flow, those deposits, going through those accounts to qualify for a mortgage.
Great. The second tip here is about just starting a business. I know you run into this actually more than you might think, and it involves the spouse as the owner. You want to talk about that?
Yes. So in the conventional mortgage world, you can qualify for a conventional mortgage if before you became self-employed, you were in the same line of work. So you worked in the marketing business for a number of years for a company, and now you decided to go out and start your own marketing company. If you file a tax return for that marketing company, even though you're 1 year self-employed, because it was related to the work that you've done prior, and we can demonstrate that, then I can actually use just that 1 year tax return to qualify you for the new mortgage. So what happens is many times people go out and start a business and they say, well, I'm going to make my spouse 50% owner. Well, your spouse, in order to use then 100% of that income from that business, your spouse would have had to be in the same line of work. So if you're both in the marketing business, great, you're both 50% owners. But if your spouse is not in the same line of work, make sure you're 100% owner of that business. Then we can use 100% of that business income to qualify for a conventional mortgage.
So what you're running into a lot is that people are not able to use all their income to qualify. Basically, does it mean they get to use less?
Correct. We can only use what their portion of the business income is, or if an LLC, they had the K1 income.
So overnight, just by making this decision, you could qualify for half as much.
That's right.
Yeah.
And it really, I mean, I'm not an accountant, of course, but they're really, to me, you're filing, excuse me, taxes jointly anyway. That income passes through to your joint return. I don't know of any specific benefit of having your spouse as 50% owner.
Gotcha. Okay, the last one here. Don't pay expenses from your personal account.
Yeah, so from a qualifying standpoint, and again, we're not accountants, but from a lending perspective, if you're paying the liabilities that are recorded on your personal credit report through your business, like your car or your credit cards, pay those through the business, and we can exclude those personal liabilities with a 12-month history of the business paying those accounts. And so your accountant, again, being self-employed myself, if I accidentally, or if I say I have a personal expense that I put in the business name, at the end of the year, my accountant is going to tell me, I have to take that expense as income. I'm talking strictly from a mortgage perspective and a qualifying that liability, though, because the business does pay it, I can exclude it.
So you don't want to show those expenses from your business account.
Yeah, if you can show the businesses, because we're all small business owners. The fact I get it. And I'm sure you all get it. You're paying. Most of what we do is related to I work 7 days a week, whether I'm here or I'm home. I'm always doing something work related. And so if I can benefit from it being a business expense, yeah, for tax purposes, then that's great as well. But from a borrowing perspective, if I can demonstrate the business can sustain and has been paying those debts, regardless of the tax implication side of it, but I can exclude those liabilities because it's already in the cash flow of the business.
So they don't go against. I want to communicate this clearly. By paying expenses from the business account, they don't go against your personal to income ratios. Do I have that right?
Correct.
Great. Okay, this has been great, James. So there's 3 tips. We work here at Bond Street Mortgage with a lot of self-employed people. These are 3 of the biggest things we see coming up all the time, and will save a lot of stress. It's not fun when somebody goes through the process, right? That we're going through the pre-approval process. You get your hopes up. You might have a house in mind, and you discover, for example, that just because you made that little decision to put your wife on the business, you can suddenly afford half a house. So I think these are very good tips and will be useful to people. James, I'm sure people, they can share this as much as they want, this content, right? You don't mind if people post this on their blogs or share it with other coworkers and things like that?
Yeah, absolutely. Feel free to reach out. You want to, even shoot me an email with any follow-up questions, james@bstloans.com. Glad to help answer any questions, be a resource for anyone out there.
Can I put your personal text cell number there? Not to call, but maybe people can text you with questions.
Absolutely. Shoot me a text anytime.
Okay. Thanks, James. Have a good one.
Bye-bye. You too.